Hello, welcome everybody. Thanks for joining us today for this latest options trading webinar. I do appreciate you taking the time out of your day to attend here. Looks like we've got a pretty good crowd forming and more people logging in as I speak. So just wanted to welcome everybody and get this kicked off right on time, noon straight up New York time. Today we're going to be talking, of course, like I mentioned, about options trading. But we're going to have a little bit of a focus on exchange-traded funds, where there's quite a bit of opportunity, in particular these days, which is kind of exciting. Mike was telling me just before we got on here that things have been moving quite well. So I did want to bring Mike, I should say Michael on the mic, or Mike on the mic, Mike on the mic, and say a quick hello. So Mike, how's it going today?
It is going well. Hello, everybody. Yeah, like Mark said, it's been very active. If you attended some of the webinars last week, we were talking about a very different market. Market's getting beat up a little bit on the downside, and now we've rallied right back. So conditions have just been ideal.
The group's grown about 40% since I came on and started. So again, this is Mark Soberman. And then I'm also joined today by Mike Rykse. Working in the background as well as Coach Will and Coach Ron. So we always stress this. This is an interactive webinar. You guys can ask questions as we go. You don't feel you need to wait to the very end. Will and Ron are more than capable and equipped to answer questions. Mike, as I'm chatting, will be answering questions. So definitely take advantage of this time and the fact that you've got us here live. So we'll be talking about a little bit quickly of who we are, kind of give a little bit of background. Mike's going to show you how you can trade options really in just a few minutes every day, how to reduce costs, how to do it with smaller accounts. And then we've got a really neat bonus package as well for the first 5 enrollees later on in the program. So let's kind of get right in and talk about this. Just so you know, obviously myself, I'm here, and Mike's here, and Will's here, and Ron's here. One of the neat things about us, of course, we were founded back in 1996. We've been doing this for over 18 years. A lot of you may not know that. We all actually trade in the markets. I actually have open trades going right now as I was checking my screen, and I do both day trading and swing trading. I was talking to Mike about that, obviously, before as well, what he's been trading. So, we are definitely heavily involved in the markets and have been doing that since day one. But I wanted to give you some more information on Mike because obviously he is the key developer behind the option strategies here. He is our go-to guy, our go-to options guru. So it's kind of good to give you a little introduction to him. We discovered Mike on the trading playground, and he's going to hate this picture. But I used to kind of give him a hard time because he was the youngster on the staff, and I basically just you kind of used to tease him that he probably tools around on a big wheel. And if you think that's not true, we've got some current pictures from Mike. He's just kind of, he's grown up, but still tooling around on a big wheel. And I know right now he probably hates me and wants me to take this slide down right away. But not to worry, because Mike's actually got a really impressive background, and that's truly how he looks somewhat today, I'll say. But he became interested in trading while in college. Fascinated by the world of options, the whole idea of controlling a lot of stock for minimal capital. Sounds like a college kid, right? I mean, when you're in college, you don't have a lot of capital. You're looking for ways to maximize. Like a lot of us, he found success early on, then gave it all back. I mean, that is exactly my story too, probably other than a different decade attending college. But I had a lot of early success, and that was like the worst thing possible because I really had no idea what I was doing. But those of us who get obsessed by this, we then go, okay, I've gotten a taste. Now I need to figure this out. I need to crack the code on this. And he really spent the years that were needed to start to develop that background. And he came on board with NetPicks as a customer. I'm going to be a little wrong maybe on time, but I'm going to say 7 years ago or so, somewhere in that area, 6 to 7 years ago. Became a really diehard customer and focused in primarily on options. I mean, this is what he was, sold on and what he's been doing. And while he says, and he'll probably tell you this, that he dabbles in other markets. I know Mike does some day trading. If you had to ask him what is the one thing you'll never give up, it's going to be the options trading. And he's somebody who's, relied on options trading for, a core part or a main part or all of his income, depending upon, where he's been at over the last few years. So, that's why you'll find he's very passionate about it. and there's a huge opportunity there. Now, we're going to talk about exchange-traded funds. I think most of you probably have a pretty decent idea of what an ETF is, or exchange-traded fund. Top-level definition: a security that tracks an index, a commodity, or a basket of assets like an index fund, but trades like a stock on an exchange. ETFs experience price changes throughout the day as they're bought and sold. I mean, up to the point of 1993 when these were launched, the closest thing to an ETF was a mutual fund. But a mutual fund you can never really trade. You can never really certainly trade intraday. There was no liquidity. It would have one closing price every day after the market closed. With ETFs, you can do a lot of great things. Besides trade options, they provide diversification. They tend to have much lower costs than mutual funds. Not always, but almost always. Tend to have a lot of liquidity. You'd be surprised how much volume there is. A basket of stocks many times for traders is much smoother. It's sometimes hard to predict what's going to happen with an Apple or Netflix and Amazon. You smooth it out a lot when you go for a basket of stocks, and many are optionable, as you're going to see. If you ever worry about are ETFs popular, they are crazy popular. As of August 2014, there was combined assets of almost $2 trillion in this country in exchange-traded funds. And just so you know, this is not going down. This is not on the decline. A year ago, it was just 1.5 trillion. So tremendous growth year over year, and this has been the case consistently. There seems to be more products coming out all the time, and there are literally, I don't know really what the count is, but there's hundreds of ETF possibilities. A lot of people may not know or don't remember, but when we started NetPicks, we were all about options. So kind of think about it. Back in 1996, we were an options service, and here we are 18 years later, and this is still a core part of what we're passionate about. And that should tell you just how sustainable options trading is. So you already know ETFs have tremendous volume. Well, so do options. And again, don't get taken in by the fact that you sometimes hear some big figures on Forex and think that's the only opportunity. There is tremendous volume every day. It can absorb as many people that we have that want to get involved in options. We'll be able to absorb that, not a problem. You can see here, though, with the options volume on the SPX, the SPY, the VIX, the Qs, it's just amazing how it's grown over the years. You can also see on the equity side, look at Apple there, 25 million contracts, per day. Over time, I should say 100,000 contracts, but the open interest is huge. And if you go all the way down even to the top 30, like Qualcomm, you still have thousands of contracts traded every day. So I think you can see the opportunity, huge on ETFs, huge on the options side. What's kind of best now is I'm going to hand it off to Mike, so Mike can kind of really demonstrate for us just what can be done with these ETFs. So Mike, let me go ahead and hand it off to you right now, and I'm going to switch it over here. So take it away.
All right, perfect, Mark. Thank you. Hopefully my screen is showing. Just stop me if it's not showing or there's any audio issues.
No.
So again, welcome everybody. Everything's good? Okay. Well, Mark, you were trying to hurt my feelings with the picture of the big wheel. I would actually take one of those to get around the office. And actually, Jim had a better idea. Jim thinks that I need a Segway, so I'm expecting a Segway here as an apology. So I'll expect it here in a couple of days.
I might get you a picture of you on a Segway. I don't know if I actually get you a Segway.
Take what I can get, I guess, right? All right, so really looking forward to today's webinar here. A lot of great trades to talk about. Like I mentioned earlier, the markets are just really active right now, really primed for what we look to do as swing traders. So I'll get over to the charts here in just a second. It's interesting. I mentioned it earlier. Going back to last week, we were in a very different market environment. We were selling off hard. Now we're rallying back pretty quickly. The great part about what we do, it doesn't matter what the market's doing. Okay, we booked thousands of dollars of profits on the move to the downside, and we've booked a whole nother series of winning trades over the past couple of days on the upside. So it's great to have a flexible system, and you'll see that here in just a second. What I want to do, if you've heard me speak before, I tend to show this slide, and I think it's really important, regardless of who you're listening to get a feel for what type of trader they are and what they're looking to accomplish with their system and with their approach to the markets. Once we get to the charts, you'll see that everything that I do as a trader, whether it be the markets that I trade, the products that I trade. It really, everything comes back to the 4 bullet points here that I'm going to talk about over the next few minutes. So for me as a trader, the time aspect, it's huge. And for me as a trader, I'm looking to get in and out in 20 minutes a day or less. I'm going to show you some of the tools that I use in order to do this. It's really big for me because I don't have all day to track every tick on the charts. Nor do I have a desire to sit there for hours on end tracking the markets. I love everything about the financial markets, but I've got other things going in my life that prevent me from sitting there in the office all day. Well, it's not a big deal. I'm going to show you how we can book 70, 80, 100% profits only coming in a couple times a day, a few minutes each time. It's a really powerful way to supplement an income or even replace an income, and you'll see that here in just a bit. Next up is the leverage. I'm with you guys. I'm on the retail side of things, and which means we have access to limited funds. We have to make great use of those funds, but that doesn't mean I want to be backed into a corner only looking at penny stocks or binary options or Forex markets. I want to trade the most liquid products. I want to trade the hot names, the big tech names. That's where all the success is at. That's when you talk to professional traders and people that have been successful in this business for years on end. Those people are trading the hot markets. They're trading the high flyers. Well, those are the names I want to trade. I don't want to be stuck trading cheap names that no one's heard of. Well, I'm going to show you how through the use of options we're able to trade those high flyers for really a fraction of the cost. We're talking about a couple $100. Consistency, it's also a big issue for me. I've done this in the past. It probably sounds familiar to many of you. Spending your weekends scanning hundreds or thousands of names, trying to find the best candidates to look at, the new hot names that everybody's looking at. The problem I have with that, it's really difficult to trade with any confidence. What I'd rather do is shrink down that universe of products to a list of names that I can get familiar with. Names that when I get a setup, I have a proven track record that I can go back on. I can take those setups with confidence. Okay, and now I'm going to show you today the list of names that we track. You're probably going to recognize many of them. I'm not trying to reinvent the wheel here. I'm trying to trade the most liquid products. Just makes it easier to get in and out at good prices. And finally, the flexibility, I mentioned it. Going back a couple of weeks, we played the downside. We're now playing the upside. So many times, people that have been involved in the markets for years, they get so focused on the long side. They feel that you can only make money if the market's moving to the upside. Okay, you even turn on CNBC, and it seems that everybody that works for CNBC has that same opinion. You have to be in a bull market to make money. It's just not true. In fact, you can make more money when the market moves to the downside because people panic and things happen quicker. So as a full-time trader, I want to make sure I have the ability to make money regardless of what the market's doing. Up, down, sideways, doesn't matter. The options market are the only products out there that allow you to make money in all three types of conditions. When we get into the slow sideways chop, there's actually strategies that we can put on that allow us to scratch out a profit during those stretches. So when we get into the slow summertime months, that's pretty big for me. I'm still able to book some profits, still make money consistently throughout the year. So I could really go on these 4 bullet points here, but it really, when you get over to the chart, you're going to be able to go back and think, hey, everything that Mike's doing here goes back to those four bullet points. That's really helped him design the methodology that he's using. All right, so we're here to talk about ETFs today. Just real quickly, I know Mark already touched on some of this. When we talk about ETFs, we're talking about trading an individual product, but inside of that product, we're tracking potentially hundreds of different stocks. Okay, ETFs, we're tracking a basket of assets, much like an index fund or a mutual fund. The only difference, like the name implies, they trade on an exchange. Okay, so you can easily go in and trade them back and forth on a regular basis. They provide easy ways to diversify for those of you with a small account size. Okay, this is a great way to easily diversify your portfolio without having to trade hundreds of stocks at one time. Okay, we're smack dab in the middle of earnings season right now. I'm not a big fan of earnings season. I don't like those overnight moves. Netflix and IBM come to mind, where it's really a flip of the coin. If you pick right, yes, you can see those 20% moves overnight in the price of a stock, but when you pick wrong, they can hurt very quickly. And I definitely learned that lesson the hard way. So during earnings season, I don't do a whole lot with individual equities around those earnings releases. That doesn't mean I'm not active. It just means I shift my focus more to the ETFs on my watch list, because those ETFs are not overly exposed to one individual equity. Great way to get through market slowdowns. Again, you're having access to a whole basket of products instead of one individual equity, so that diversification really helps you out. They're very liquid. These are some of the most liquid products in the world, making it very easy to trade single contract, 10 contracts, 20 contracts. Very easy to get in and out of these trades regardless of the size that you're trading with. And then you don't have to worry about upgrades and downgrades. This one drives me nuts when you get into an individual equity position and then overnight, out of nowhere, the name that you're trading gets upgraded or downgraded, and you're looking at a big move the next morning. It drives me nuts. When you're trading ETFs, you don't have to worry about that overnight risk, because again, you're not overly exposed to one individual equity. So I just put together some of my favorite names. When you take a look at this list, if you did nothing else but trade ETFs, we're looking at, what, a dozen names here? You have access to index products. You have access to commodities, sectors like the financial or energy sectors, volatility products. So what you can do is create your portfolio to get that diversified approach without having to look at dozens of different products. Okay, these are some of my favorite names. I'm not saying that these are the best names or the most popular names. These are just the names that I'm very familiar with, names that I've seen really nice, consistent success with over the years. And we're going to go take a look at some of those trades here right now, some trades that we've taken here over the past week or so. So let's go ahead and jump over to the charts now. We'll take a look at some examples. And let's go ahead and start out with XLE, which is one of the energy ETFs that we track. So the system that you're looking at on the chart, this is what's known as the active swing trader system. It's the system that we use inside of the options mastery program. And the system identifies the entry points, the targets, and the stops for us. And there's two main factors that make this approach very different than anything else that I've seen on the market. Number one, if you look in the upper left-hand corner, you'll see XLE momentum bar 0.5. Okay, many of you are probably looking at this chart trying to figure out, well, is he looking at a daily chart? Is this a weekly chart? What type of time frame is this? It has nothing to do with time. This is strictly looking at price action. So that momentum bar 0.5, it's what's known as a range chart. If I click on any one of these bars on this chart, you'll notice the difference between high and low. If I drag my data window over, the difference is always going to be 50 cents from high to low. That could take 2 minutes. It could take 2 days. Okay, that's powerful, because now all of a sudden we're focused on price action. We're ignoring the time. If you're looking at a daily chart, for example, going back over the past couple of weeks, if you're using a system that needs the close of a bar or a candle to give a setup, well, you're potentially missing out on hundreds of points because the markets have been so active lately. Whereas in that same day time frame, we could have 3 or 4 bars print on our range chart. So that means we're able to react faster. We're able to get in and out of these trades quicker. Okay, it's a huge advantage. Now, why did I pick a range of 50 cents? It seems like a pretty random number. Well, I'm not just pulling that number out of the sky. There's a formula that we look at the end of every month. And that formula tells us what range we should be using for the following month. So as things start to change, this is not a system that breaks down as soon as the market conditions change. We have settings built in to the system so it self-adjusts to the changing conditions. So if we go into November and December, the energy sector has been extremely active. Okay, oil prices have been extremely active here of late. So when we go into November and December, we may come in and say, well, we're going to look at a range of 55 cents or 60 cents. It all depends on what we find from our formula here at the end of the month. So everything's crystal clear. There's no guesswork. Now, the second factor that makes us very different, a lot of times when you look at other systems out there, yes, they have custom indicators, but there's a lot of discretion involved. Okay, you don't quite know exactly when to get in and when to get out. Well, we have custom indicators here, but we also have a custom-built trade calculator where all of our criteria is built into this calculator, telling us exactly where the entry points, the targets, and the stops are at. So if we take a look at this long setup that I've highlighted, this is a setup from last week, you'll notice that my entry point is represented by these blue crosses or plus signs, whatever you want to call them. We have our targets up above, which are the two series of green dots, and we have our stop, which is a series of red dots. So now before I ever get into the trade, I know exactly where my entry point's at. I know exactly where my targets and stops are at. I don't have to sit there and spend a half hour evaluating the chart, drawing trend lines, and looking at 10 different indicators. Everything is crystal clear for me. There's a roadmap that I can follow. This is really what allows me to get in and out in 20 minutes a day or less. Because when I come in, I can literally take a quick 30-second glance at this chart and see, is there a setup? If there is, where's the entry point? Where are my targets at? Where are my stops at? It's really as easy as that, and allows me to move on with my day. Okay, so it's a great approach for those of you that have full-time jobs, have family commitments where you're just not able to stare at the charts all day. I'm with you. This is exactly how I'm able to get it done. Okay, so when we had all our criteria met, we had this long setup, the system told us where to get long. Instead of coming in and buying the shares of this ETF, okay, I could definitely do so, but at the time of this setup, we're talking about an $82 ETF. Okay, to put on any type of a sizable position, that's going to tie up a lot of capital. So what I did is I went in and I bought the October weekly 81 call for $2.15. Okay, that gave me control of 100 shares of XLE at $81 a share. In this case, I was looking at a weekly option. We've talked a lot about monthly options here lately. Those are fine too, but when the market gets this active, we're able to get away with the weekly options, which gave me control of XLE for 1 week. Okay, now I paid $2.15, total cost $215 per contract. That's that leverage that we talked about earlier. Now all of a sudden, for a couple $100, I'm controlling 100 shares of XLE. So if you've got a smaller account size, perfect. If you've got a larger account size, not a problem. Put on 10 contracts, put on 20 contracts. Okay, very liquid products. Now in this case, a nice part about the calculator, did we go straight up to target? No, we kind of bounced around, we triggered in, we pulled back. If I don't have this calculator telling me exactly where to get in and where to get out, I can guarantee you on this pullback, I'm starting to second guess things. I'm starting to say to myself, oh, the market's starting to roll over, maybe I should jump out. But because I have that roadmap to follow, I didn't panic down here. Okay, we never really threatened the stop. We took some heat on the trade, but we never threatened the stop, and we're able to reverse back to the upside and hit that full target. So once I hit full target, again, no guesswork. There's no second guessing the system saying, well, I'm going to hold on trying to capture the bigger move. None of that. As soon as that second target's hit, I'm out. I sold out of my call option, booked a $155 profit or a 72% return. I was in this trade on the 16th. I was out of the trade the very next day. This was a 24-hour trade. Now, every trade is not like that. They're not always that quick. My typical holding time is anywhere from 24 hours on out to 2 weeks. That's my desired holding time. That's what I classify as a swing trade. So just really a great move on XLE. Now here's where it gets powerful, because let's switch over to symbol GLD, which is an ETF tracking the price of gold. Okay, now when you take a look at this chart, you'll notice that it has a very similar look and feel to what we just looked at on XLE. Okay, there's a couple of differences. The main one being we're looking at a momentum bar of 0.84. So now instead of having every bar represent 50 cents of price action like it did on XLE, now every bar here is representing 84 cents of price action from high to low. Okay, it goes back to that formula that we look at the end of every month telling us exactly what range setting we should be using. It's going to be different based on the product. Okay, XLE was an $80 product. Now we're looking at GLD, which is over $100. So when you get up to the more expensive names, for obvious reasons, you're going to look at a larger range setting. Now, what classifies a setup, what the criteria that we're looking for remains the same, regardless if you're looking at a stock, an ETF, an index product, it doesn't matter. The criteria remains the same. And that's all built into the calculator. Now, I mentioned we can make money in an up, down, or sideways moving market. We took a look at playing the upside on XLE. Now we're taking a look at the downside on GLD. The calculator gave us our entry point. marked by the plus signs, gave us our targets, marked by the green dots, gave us the stops, marked by the red dots. Okay, I love trading this system because everything is so crystal clear for me. So when I came in here, this setup was back on the 10th of September. Okay, I knew exactly where my entry point was. Once I hit that entry point, I came in and I bought the October 120 put for $2.61. So for $261 per contract, I'm controlling the downside of GLD. Now, for those of you that don't have any experience with options, I know it's a little tricky initially because what we're actually doing here, we're buying a put option that increases in value if GLD moves to the downside. Okay, it's a really powerful way to take part in these moves to the downside. So once we hit target here, we drifted lower. It wasn't an overnight move like XLE. Okay, we didn't hit target till the 30th, so we had to hold on to it for a couple of weeks. We were able to book $169 profit, a 65% return. Okay, remember, we're only tying up, in this case, $260 of capital to get into this trade. Okay, that's the great leverage that we talk about. Now, we talked about the individual stocks last week, stocks like Netflix and Google and Priceline. I got some feedback from some people that said, hey, Mike, the Priceline trades, they look great, but it's so expensive. Even with trading the options, those names are pretty expensive. I just don't know if I could handle that risk. Well, that's why I wanted to show the flexibility here with the ETFs. Because if you're brand new, if you wanted to take a more conservative approach, okay, trade some ETFs. Start to grow your account slowly. With these ETFs, what you're going to see here today, we've talked about a 70% winner, a 65% winner. With the ETFs, you're not typically going to see the 200% winners. Okay, you typically see those large winners when you get over to the individual equities. But am I going to complain with a 65% winner, a 70% winner? No, because these are definitely safer trades. I'm a conservative trader. Okay, a good portion of my watch list, of my trade list, is ETFs. I love these products. They're very liquid. They're just safer plays. So it's just inside of your portfolio, you can go ahead and diversify your list. Give yourself some access to the high flyers. Okay, give yourself some access to the home run potential, and then also have a portion of your list in some safer plays. Okay, let's take a look at a few others. Let's take a look at FAS. FAS is an ETF that tracks the financial sector. Okay, one of my favorite products. It's just really, really active. And actually, I'm just looking at this chart now, and I have to make sure I had an order in place. Need to make sure I got filled, and I did. So as I'm speaking here, we just closed out of another full winner on the long side. I haven't even had a chance to mark this one up yet. So we're going to go back to a trade that was closed out last week on the upside. Again, system remains the same. Only difference here is we're looking at a range chart of 1.16. Again, the formula at the end of the month told us exactly what we should be using here for a range setting for the month of October. So once all my entry criteria was hit, gave me my entry point on the long side, I came in and I bought a weekly 89 call. I've been trading more weekly options here over the past couple of weeks because the market's been so active. We've been able to get in and out of trades in a lot of cases in 24 to 48 hours. So we've been able to get away with those weekly options. And I bought the 89 call for $3.70. So for $370 per contract, I'm controlling 100 shares of FAS. Okay, this is a $100 product. So for essentially the price of 3 or 4 shares of this ETF, I'm actually controlling 100 through the use of a call option. Now this one drifted up to target. It wasn't that straight move up, but we were still in and out in 24 hours. Once we hit target, I booked a $230 profit, 62% return. Okay, you should start seeing a pattern here. Okay, we're starting to see 50, 60, 70% winners. Okay, these are really safe trades, and that's by design. This is the safer part of my portfolio. Okay, so you can see that the last 2 trades, really, really nice winners. Okay, so if you've got a $5,000 account, are any of these trades out of the question for you? No, we're talking about $200, $300, $400 to get in these trades. Very, very reasonable. Now, we've talked about the energy sector. We've talked about the financial sector. We've talked about gold. What about TLT? Okay, the bonds have been pretty active here lately as well. Okay, this is TLT and ETF tracking the bond market. Here's another short trade that was closed out last week. Okay, we bought a put option. The system remains the same. The indicators that we look at, what makes up a setup, everything remains the same regardless of the product that we look at. If we were to go over and look at a product like Netflix, we're going to look at the same indicators. We're looking at the same sequence to get a setup. So on TLT, I played the weekly 123 put, tied up $185 of capital to put on this position. So I'm buying the put, increases in value if TLT moves to the downside, gives me that flexibility that I'm looking for, and I booked a $90 profit, close to a 50% return. Okay, and this was a trade, another 24-hour trade. Love it when these happen. They don't happen on every trade setup, but when they do, definitely love it. I know I'm moving quickly because I'm running out of time here, and I want to make sure I get to all these charts. What about some of the index products? This is symbol DIA. This is an ETF that tracks the Dow. Okay, here's another trade that was just closed out. Okay, another trade on the long side. Okay, I came in, bought a weekly 161 call, $263 per contract. That gave me control of 100 shares of DIA on the upside. Once I hit target, sold out, booked $122 profit, 46% return. Here again, in on the 16th, out on the 17th. Okay, we put another long trade on the table. Okay, we have this long trade that's still working. Notice what's happened here. This is a live look at a trade that I have going. We hit first target. We've actually gotten up halfway in between first and second target. Notice what the calculator's done. The calculator's moved my stop up. We actually have a trailing stop in place. We're actually trailing what we call our signal line here. So worst case, if the Dow flips around on us here tomorrow, okay, the market's a little extended at these levels. We've seen a really nice run up the past 3-4 days. If we turn around, the worst case, I'm out with a small profit. And as I come in this afternoon to do what I call my afternoon update, I'll come in for 3 to 5 minutes here this afternoon and go through all the lists, all the names of ETFs and stocks on my watch list. If I come in this afternoon, I can literally take a 30-second glance at this chart and know that, hey, I have to move my stop up. Okay, I can set a price alert. I can mark that stop with a horizontal line that has an alert on it if I want to. And I'm good to go. I'm ready to move on with my afternoon. I don't have to sit there and evaluate, make calculations, draw trend lines. There's no guesswork. Everything's outlined for me. Now, what do we see as far as long-term results? For us, at a minimum, we like to see a 65% win rate. Okay, we have names that'll blow right past that. Okay, we've got some really nice performance numbers, but even more important than the winning percentage is the profit factor. I want to make sure my winners are larger than my losers. Okay, I like to see a profit factor of 2. What that allows me to do, if I know that my winners are larger than my losers, I don't have that pressure there to win 80-90% of the time in order to be successful. In theory, I could win 55% of the time, but because my winners are larger than my losers, I'm still making money. I'm able to make up ground quickly even when we have a losing trade. Now, fortunately for us, we actually have a good combination of good winning percentage and good profit factor. Well, that's the formula. That's the formula that I'm looking for. That's the formula for success. Okay, now I looked at some winners just to wrap up here. Winners 50, 60, 70% range. In last week's webinars, we talked about trades on Netflix and Google and Priceline. We're talking about 100+% winners. On the losing side of things, typically our losing trades on the ETF side in the 20 to 40% range. Okay, so that just kind of goes to show that our winning trades are larger than our losers, and the losers will happen. So it's really important to keep that reward to risk ratio in mind. All right, so I could go on and on. There's just so many great trades to walk through here, and that's a good problem to have. I do want to make sure we have time to get to questions, and so at this point I'm going to start to throw it back on over to Mark, and he'll walk through how you can get access to this active swing trader system.
Awesome. Thanks, Mike. Yeah, that was great. I always think it's almost amusing when we, or I don't know, we have to almost apologize for a 46% return because, typically on some of the stocks and equities, it's 70, 80, 90%. But that's really quite compelling, and I think, like you mentioned, a couple things that I heard in there besides the usual was the type of win-loss percentage that you can have and still have a very profitable overall return. That's very reassuring. I think it should be for people, because you realize that even, of course, you're going to have trades that don't go your way. It's very reassuring to know that when a trade does go your way, you quickly get yourself back and then some, typically, on the very next trade. And then the second thing, as you can see on the screen here, is that you absolutely can trade options with a smaller account. You just have to be more selective, of course, with what you trade. But that's one of the real benefits, of course, of the ETFs. And there is some level, of course, of complexity with options, but it's nothing that is insurmountable. And I hope you see that as Mike sort of took you through kind of the classic directionally based trades. And there's always things that you need to know as far as which option to choose, what defines a profitable options trade. The great thing is, with this course, you're going to have the fully developed trading system as well. But you need to know things about settings, how to scale and grow the account. I mean, all these things are important because you don't want to put yourself in a position where you find yourself in hot water and are blowing out an account. I mean, that doesn't help anybody. So that's really the reasons that we decided to develop the Options Mastery. And I really want to stress with the Options Mastery that it's every component that we feel you will need to be successful with options trading. And what I mean by that is there are other things out there that are sometimes it's like, well, here's a book all about options theory, and it's never going to get you anywhere but theoretical. You have to have the trading system, but you also have to have the trade plans. You need to know the best stocks and ETFs to trade, because not all 10,000 stocks out there are worth trading. You also need the education on the various different option strategies that are going to be effective. And I really think you need ongoing, right? You need to sort of be able to work with somebody on an ongoing basis, especially in the beginning. So let me sort of take you through how we built the Options Mastery program and made sure that we were able to check off all of those boxes. On the top level, and I'll go into a bit more detail here in a moment, we've got trading system, we've got live training, we've got ongoing support, and then we also made sure that we had the basics, right, the core fundamentals, because everybody starts this with different experience levels. We've got about, it was about 60% of you definitely with options experience, but 40% of you very limited. So we need to make sure that we have everybody covered in the development here. So let's go into a little more detail on the live training. So the great news, I think, is what is today, the 21st? Well, next week, Thursday and Friday, Mike is going to hold the full 2-day live training. It is done in a live interactive webinar, kind of similar to this, but it's more interactive. You'll be able to see the other coaches and the other people that are there. And it's done over these 2 days, and Mike literally kind of gives you the full college education, the 4-year education, boils it down into the 2 years. Because rather than getting really caught up in all the minutia, and you can, trust me, in options, it can get as technical and as dry as you want it to be. He focuses on what you need to know to be able to trade effectively and trade profitably. We can kind of throw away all the rest. That can be learned at a later time. We really want to focus on what's going to matter most over those 2 days. And I know that not everybody's schedule next Thursday and Friday might be completely wide open. So I do like to stress that everything gets recorded and made available immediately. So you can certainly watch on replay. You can certainly review information. You can go over it again, and you'll want to. There'll be some things taught there that you won't immediately need to put to use, but later on you're going to want to. Different types of strategies are taught during those 2 days because, market conditions change. We're in a very, high-moving, volatile thing. It's wonderful, right, for the straight directional moves, but there's other market conditions that will be more sideways, that will be choppier. And so Mike has really a great way of showing you how you can identify different market conditions, but still take advantage of those same exact setups that you saw. And I think everybody could agree what you saw on the chart was crystal clear. I mean, it was the stock or the ETF. It was where you should buy your call or your put. It was where our objective is, where that should move to, where we should take our profits, and if we're wrong, where we should get out. But what's really key is knowing that, well, there might be certain markets where, it's not as volatile, doesn't have big of range, so we'll show you how to take advantage of that and still be quite effective overall. In addition, it's never good enough for me just to say, here's some great software and sort of let you guys sort of struggle with it, and try to figure everything out. We really make sure that, number one, we teach you the software, all of the inputs, all the settings, and actually provide all of those for you. All right, because again, I think sometimes, you might use an indicator or a set of indicators and they look interesting, but you have to realize every market has different behavior. I always like to say that every market has a different personality. You really can't typically take something 100% universal across the board. So we definitely spend some time making sure that you know how to properly customize your software to the specific market that you're going to be trading. Now, to me, the 3 live weekly Q&A calls is huge. I could point to one thing when people say, well, why would you not succeed at this? If you don't stay involved, that might be one reason. And I think there's a lot of other trainings, courses, etc. out there that try to provide you with what you need up front, but there's no ongoing. It is really hard to become an expert after being taught one time in a classroom and given software. Where everything is going to really fall into place and where you're going to gain all of your confidence, I believe, is seeing trades transpire as they go. So Mike showed you quite a few trades that he's had on, some of them exiting today. Think about how even more valuable it would be if you know the strategy, have the software, and then are actually able to see Mike see that setup last week, pick the call or the put option he's going to trade or the specific strategy that he's going to deploy based on market conditions, and know that it's gotten executed, and the next time you come in, see how it's progressed, see what the open management decisions are. It's very, very valuable. Okay, so you're going to have this available to you 3 times a week. This time is yours. You can ask questions. You can interact. You won't be going, ages of time without getting answers to your questions, and super, super valuable. Okay, and these are also recorded. So again, we want to make sure we have customers worldwide. We don't want to dictate to you